Welcome to StockOdds Odds and End podcast. I'm Dave Singh here with Rob Friesen, getting ready for the week ahead. This is our Saturday night live edition, I guess. How's
Yeah,
everything?
well, I'm glad again we're hitting on Saturday. We must have a winning streak here of being able to pull it together for Saturdays. Now it is late, but that at least means that our wonderful subscribers can see it on Sunday, and that's certainly before Monday's trading action. Now, why don't you introduce us like Russell Brand and go like, you beautiful awakened 6.5 million viewers or listeners or whatever. You got to get a little bit more dramatic here, buddy.
I need some acting lessons first.
Anyway, man, he's got some funny stuff he comes up with, though. Holy smokes. Okay, we got to cover some things here. We've got coming to the end of a month and the start of a brand new month, so that's always adds a few more things to look at. So why don't we get started here? So first of all, a little bit of review in terms of the performance of some of these ETFs. So of particular note is the performance for the month so far. Diamonds 4.68, IWM Russell. So that you know that was lagging. It had been kind of behind, and it finally kicked in this month as we kind of expected. Did we not talk about possibly small caps participating more in July with a summer rally? Did we not talk about that here?
Totally.
I think we did. So Hughes 5.2%. They might have even done more and kept ahead of the IWM if it weren't for the NASDAQ 100 rebalance, which kind of held a little bit of some reins on some of those mega caps because they were charging pretty good. And the SPY 4.7%. So far this month, that is higher than the average performances. SPY was slated to do about 2.7, and it's done almost double that. Really, really good to have, first of all, the insights, the seasonality of what can happen, and we don't mind it doing better. We just like to know kind of what the overall direction is, and if you can use that in your trading, then by all means. We like to kind of trade a bit agnostic to the potential directions, though, just because that's a great baseline to operate from, is to be neutral. And then from that perspective, if you want to capitalize on a discount open or a premium open or relative strength, you certainly can. Now look at the year-to-date performances. Q's up 44, again, largely driven by the mega caps, and SPY up 19.4, IWM up 12.66, and the Dow, or the diamonds here on behalf of the Dow, at only 6.99% year to date. So, they did better last year than the rest of the market. They were only down 9.1% versus like 37% or something, 37.1. So they obviously did better last year, held up. And then this year, just because of that defensive nature, because of the price weighted context of the Dow 30, first of all, less sort of desirable symbols when it comes to potential growth or, forward-looking market with all the things that it's been through and what it's, projecting going forward. There's a lot of those NASDAQ stocks that are just been more desirable for people, right? Like Tesla, things like that. So in the sector ETFs area, all have been green for the month as well. The standouts, energy, really showing itself in an interesting way because it was lagging so much this year and then finally kicked in here in July, up 7.68%. So still down for the year, but like something's going on in the energy patch. And the next best performer is the communications, obviously a lot driven by Meta. So for the year, 43, almost the same as what the Qs have done. Meta and Google are driving communications pretty well. And then XLB, basic materials, and that's usually because the dollar has been a bit softer over the last while. That can drive basic materials, metals, things like that. But for the year, not as large a performance as some of the discretionary and the tech and stuff like that. XLK at 4.1 for the year, 42. So again, very similar to what the Qs have done and the communications. And the utilities, even though they had a positive month this month, like I said, everything was shining through because the market kind of changed from just the Magnificent Seven or the big caps, and it became a broader market rally this month, which to me shows that there was an appetite across the board. There was strength, even more strength there than might have shown just by the index change. It was a broader market response. So I thought that was pretty healthy, even in spite of the bad news and the fear mongering and the, end of the world thing. It's the market was pretty strong across the board. So moving on here, this is the contributing stocks so far this year-to-date performance. Meta 170%. Google 49%, Tesla 116, Amazon 57, Apple 50%, Microsoft 41. I mean, these are very, very significant performances here. But it wasn't shared in all areas. Pfizer not having a very good year, not just because one of its distribution manufacturing facilities went up in smoke. No, not just because of that. Just having a bad year, and Lilly having a much better year. Up, tale of two healthcare stocks there. But anyway, always interesting to look through that. You can get this from FinViz and look at the map of the market yourself, and kind of look through it from what's happened this last week, this last month, last quarter, year to date, and you can drill down into them as you click on them. But you can see definitely the leadership in the tech space. NVIDIA 219 driving the semiconductors, Tesla driving the discretionary area, Meta driving the communications area. For consumer electronics, Apple and Microsoft obviously leading. Right.
It's interesting. Five of those are basically AI plays and defensive plays, right? So there's this perception that these big big cap techs are defensive, that they're going to grow either way the economy goes down or not, and then they're all artificial intelligence plays like Tesla, NVIDIA, sure, Microsoft, Google. So it's like a double whammy.
Well, and some have more. Like, I mean, with Tesla becoming more the standard for charging stations too, right? I mean, Ford's going to be using their charging, GM, things like that. So there's some that have other segments that they're operating into that are helping boost it, right? But you're right, the largely AI, and we've talked about the AI tailwinds for the market in general. And so a lot of the sectors and industries will benefit from enhancements and adoption of technology, and AI certainly can play a big role in that. And remember that layoffs are not necessarily negative for companies. I mean, even Meta's proving that they did trim some fat, and they're being more efficient now, and a little bit change of focus too is helping them. But you can lay off a lot of people and not hurt the stock price. So it's hard for new entrants into trading and investing to understand those relationships, just similar to where you have earnings and the earnings are good and the stock goes down, and a lot of people get confused why that is.
Yeah.
Probably because it's been already priced in, it's priced to perfection. It might even open up strongly. You had one that you were looking at last week there, LW, that opened up actually and then sold off 7.5% from the open, right?
Yeah.
On earnings day. So, that can happen too. Anyway, moving on, we have the last day of July seasonality for ETFs. Okay, so what pops out at you from this list here, Dave?
Yeah, the themes are a lot of strength in silver and gold, even real estate and utilities. Even the NASDAQ stuff, technology is strong, discretionary strong. But the weakness comes from the super high beta things like the ARK fund stocks, and also chips, SMH and
Yeah,
biotech.
SMH. And they've been really strong stocks there too. So both of those SMH and SOXX are semiconductor ETFs.
And biotech as well. So think of your high beta health stocks and high beta tech stocks being weaker, but maybe the bigger cap stuff a little more stronger. So,
well, yeah, because like SSO is the 2x bull of the SPY, like the SPY, right? And SDS is the inverse. And so it says, SSO is supposed to be strong, SDS weak. So again, just because ARK is showing here, that doesn't mean that takes all the tech out of it. Like Qs are still showing strong, SPY through the SSO there, industrials, discretionary, IWF is growth, right? So, and real estate. So like, yeah, we do have some basic materials here. So this will depend on what the dollar's doing tomorrow, or sorry, not tomorrow, Monday. How well this plays into this last trading day. If the dollar looks like it's going to weaken, that could be really good for these guys because they're already slated to go up. So, okay, I'm just looking at positive values by change in the ETF world. 62% of our 101 ETFs in our list are slated to be positive, 38 negative. So this is the seasonality for the stocks themselves for the last trading day of the month. So Micron is, a semiconductor that's slated to be weaker, but CLAC, also a semiconductor, slated to be stronger. So you might find some pairings. Here's AMD as well on the weaker side, Intel on the weaker side, right? FSLR on the stronger side, ILMN. So you could actually come up with some pair combinations, staying in the same sector and being long and short. So that's interesting. So, you can go to StockOdds web screener to get signals on indicators like RSI, percent B, things like that. You can also add into that some of the considerations for seasonality and maybe, have some matching approaches here where CLAC, for example, a bullish possibility for the last trading day also show up in some of the other screens. So just keep that in mind. Look for that combination. Okay, now on the stock side, because we don't have inverse or leveraged ETFs in here, these are the stocks themselves. You have 53% positive change versus 47, so not quite as strong showing. And that also fits into this July seasonality here, where the last trading day of the month is positive for July, which is only one out of, I think, only 3 out of 12 months of the year have positive last trading days of the month. So July is one of them. It is a strong month historically. And look at the Qs have produced 4.1% on average. And what did we see from our list up here? The Qs have done 5.2% for the month. So they already beat that. But see, the projection of it was 4.1, and then the SPY 2.7. So not as strong. But the last trading day is positive. And so we're seeing that also when we look at these stocks here. There is a little bit more positive skew to things. Okay, so that's the last trading day of the month. So some very interesting stocks here. And especially if you go through some of these and look at where they've come from. If any of these shorts have been up a lot, that could give you your advantage going into the Monday's trade. If any of these have been down a lot, again, that could give you your advantage. Okay, so we'll be finishing out July. Now let's roll into the first day of August for ETFs. What pops out for the first trading day? Sometimes we see a complete flip-flop, like the things that were supposed to be strong on the last day of the month are actually weak on the first day, and vice versa. So what do you see here?
So from like the ARK-K and biotech stuff is now a good long. It's exactly the opposite of the last day of July.
Now the thing we'll look at shortly here is how is July supposed to open overall? Well, on just these ETFs, you're seeing that it's actually more bearish for the first day according to these ETFs. But again, some of these have inverse in them and stuff like that, or leveraged. But so we're getting a picture here. And let's roll to the stocks themselves.
Yeah. Well, that first day of August is supposed to be minus 0.13% for the spider. So it is expected to be a little soft.
We have that right here. So actually August ETFs, first trading day of the month, Q's supposed to be at least a slightly positive at 0.2, but SPY negative at minus 0.13, as you said. So keeping that in mind here, it's not a huge down day, but interesting. So we've got a lot of energy stocks here on the short side. Look at this: MRO, Devon, EOG, Vale, Halliburton, Hess, CVE. We got APA. This is basic materials and energy predominantly short, which there was basic materials like GDX and GDXJ in the long side on the last day of July.
Yeah, and these long stocks are super high beta: Etsy, Shopify, Roku, Teladoc. These are the ARK-K symbols.
Yeah. Well, we had AMD was on the short side for the last day of July. Now it's over here on the long side for the first day of August.
So again, Tuesday. So Tuesday is the first day of August, but it's also
right. So yeah, sometimes Josh was pointing that out on the Friday show, is that sometimes these have a lot of earnings around the time where they're showing up on these first day and last day, right?
Mm-hmm.
So to play into it quite a bit. All right, well, moving on here. We looked at that. So this is the ETFs for the month of August. You can see that we really don't have a great showing for August until we get into the last 5 days where all the performance comes from.
Mm-hmm.
One of those reasons, I think, is because a lot of institutions are offline, so they're non-committal. And if you think about the last trading days, there's many jurisdictions within the U.S. that families, kids are going back to school. Summer is over earlier than you think, even before Labor Day, right? So, so investor mentality is, kind of back to work and get into some stuff that maybe they didn't have any investments over the summer, especially through earnings season and stuff like that. So it's kind of like get back to work, and you can see it pick up its performance here at the last part of August. Now, the other reason is that sometimes around the third Friday or that third week of August, we can have a bad session. We experience some volatility, maybe a decline, and then from that point, it pops up and performs well. But anyway, for the month, SPY not expected to perform fantastic, only 0.7%, but Q's still 2.3. Now, this could be changing a bit this year, only because the NASDAQ 100 algorithm changed. So this has been what has happened in the past. It might not be as robust for August, so keep that in mind. Okay? For the Qs specifically.
Well, plus we're coming in from a position of really elevated levels on the Qs.
Right. Now, the first Friday of the month here, we're going to look at in terms of the ETFs and stocks. That's also supposed to be a down day for the NASDAQ and only slightly positive for the SPY. So here's the ETFs for the first Friday of the month.
Yeah.
So the first day of August is on Tuesday, and then we got a couple days until Friday, and so then this hits. And what are we seeing here?
Some strength in financials, which we haven't seen in the other days. So CRE, XLF. Again, strength in oil, XOP, IWM, some small caps there. And then weaker in gold, high beta stuff, RKK, and biotech stuff, IDB.
So we got a little bit of a roller coaster here. From Monday, we're gonna GDX and GDXJ and some of the other stuff supposed to be stronger, and then weaker the next day. Oh no, is that right? Yeah, stronger and then weaker, and then weaker again on Friday. Okay.
That could be great for mean reversion strategies. I mean,
it's possible. Yeah, it's definitely possible. Again, it depends on where we're headed here. So we'll look at what the lay of the land is on gold, because that could be interesting for the setup on Monday. But now let's roll to the stocks here. So we've got first Friday, we've got Team
Carvana.
Yeah, AMC, Carvana. Like, if you see stuff like that, that's been such an outlier. Like, there was probably, a meme trade or some, in the past, some events going on that caused it to be this dramatic. So I would discount it a little bit. And, you're probably going to do better by the more institutionally driven stuff like AXP, JP Morgan, Bank of America, and over here, you've got BMY, Shopify, Enphase, Tesla down here.
But there is a theme for strength in financials just from this list here.
Yeah, definitely. And what is that showed up? Yeah, that showed up here in the KRE as well. Yeah. Definitely. Okay. All right. Well, that's quite a bit of info so far. Let's see what we got. Here's the economic calendar. And then after this, we'll roll to some of the futures, and then we'll be done here. So, what do you see with what's on the horizon this week?
In terms of the reports, there's some themes, which is manufacturing data, jobless claims, and wages, whether the wage inflation is persistent or going to ease a bit. So Tuesday, there's some ISM manufacturing, construction spending, things like that. Wednesday's an important one, ADP employment report. Thursday, again, job activity. And Friday, there's the unemployment rate, hourly wages, and non-farm payroll. So those themes of employment, and then that wage number will be important. If that number goes up, then it makes it harder for inflation to come down overall.
Well, it's interesting because it would be pretty much every first Friday of August, you have the same reports, right?
Yeah.
So, and you see the stocks and the ETFs we've just looked at. So there must be some commonality to that. It really doesn't matter, what's actually reported with the unemployment numbers. The same stocks and the same sectors tend to perform.
Yeah.
Up and down, right? So I find that hilarious. All right. Well, I'm just going to, we're done that. I'm just going to bring over the futures here, and we're going to look at a couple things before we go.
One last point, the earnings. Tuesday we have AMD, and then on Thursday we have two big ones, Amazon and Apple. So there's three big ones. And then there's a long list, but you have to check your symbols against that. But the Amazon and Apple will be interesting on Thursday.
Okay. Let's look at the indices. Now, again, we don't have live futures because we're not doing this show on Sunday, when at 6 p.m. Eastern time, the futures start trading again. But we can look at kind of where we've come from here. And I just want to point out, especially with the S&P 500, that we had, let me get a bit bigger here. We had an expanded trading range session there on the 27th, right? And we went and made a new 52-week high, but we also pulled back and closed below the range of the previous day. And then on Friday, that retraced, so we had an inside day on Friday. So when you're looking at that, you want to then set your alerts, your thresholds for the high that we achieved on Friday, as well as the low that we achieved on Friday, which the low of Thursday is just slightly below that. And then the high of Thursday is quite a distance still from Friday's high. But those are the thresholds that you want to set. And then depending on how we open, we could have another inside day, but it is the last trading day of the month. And usually there's some fairly good movement there. So if we break through Friday's low, then look for Thursday's low test. If we break through that, you've got then a break of the 5 days, and you're probably going to sell off into this moving average, the 20-day moving average. That was what I would say the target would be. If you can break both Friday's low and Thursday's low, you've then broke the 5-day low. So we should plunge into the 20-day. Now, it may bounce off that and still close a bit higher than that. And likewise, if we want to rally, it's not expected to be a very strong day, right? We looked at that already. It's supposed to be slightly up, but not massively. But if we want to rally on top of this close, then I would be looking to test Thursday's high, and we may tag it and pull back a bit and close just below it and not actually break out, but still show a positive day. So that's how I would frame that. And let's just take a peek at the NASDAQ. And you can see that it's the same inside day Friday framing that we would do, but not the same distance and a ways to go to get to new 52-week highs. But you would definitely want to test where we came from here. Same thing on the downside. We've got plenty of support, and we are sitting on the 20-day. So if that was to break, we could sell off more significantly into this consolidation area here before we broke to the upside. Russell, it's gotten really choppy, very violent, but we've had a big move up, and so it's trying to digest all that, and it doesn't have that same leadership that we have. For example, if you go to the Dow, how that sort of plotted up and just kept plotting up without that much volatility. The Russell's not like that. Much more volatility, much more skittish, and you don't have that same, 14 days in a row up or something like that.
Yeah.
It doesn't happen with the Russell. The VIX has been declining, and so overall, we're still relatively low. Not a lot of put protection buying going on to protect other people's money. Sentiment is still really robust. That could mean there could be a blind side coming. It was a very strange day on Thursday, and the Bank of Japan thing is actually probably a fairly significant issue going forward for the future, as it does affect the carry trade. So there is a lot of concern that investors could get blindsided. But when that's going to happen, we don't know. All we know is that the backdrop of the broader market rally, the lower volatility, the sentiment being pretty good, a lot of great economic reports, soft landing, interest rate cycles mostly done, if not done. I mean, all these type of things are adding to the fact that I think we should be heading here, and I'll put this on the monthly. I think we should be heading here to test where we came from with these all-time highs. That's what the market wants to do. Whether it can get there, I don't know. But it's not just our market. Let's go look at the DAX. The DAX is already making new all-time highs. And it's a global economy too. And so yes, it does matter that how Europe's doing, how Euro Stock 50 is doing. I mean, everything's Nikkei is firing, everything's firing on all cylinders. So it does matter. And it can contribute to a bullish sentiment, which I'm not going to argue with. But I can be agnostic. I don't really care about the direction. But I, can also use it if I so choose. So I'm suggesting the same for you. Looking at bonds, so the 10 years, more widely followed for us short-term traders. And you can see that it's pulled back a little bit, which meant that rates went up a little bit. So bonds decline, rates go up a little bit. So they were just adjusting to the rate hike that we just experienced. I can't tell from this where we go from here. That's unknown. But if it does, decline further, that means that there's something contributing to it in the terms of still a persistent inflation, regardless of maybe the economic reports. And so that could mean that we will have another rate hike or two, or may even go into next year, even though they didn't indicate that. So bond traders are a little more savvy than equity traders, I've found. So we have to follow what they're doing. So it'll be interesting which way we cycle back up or we break down here. So metals, gold is, hanging up there pretty well. And so we're looking at this elevated position, still lots of potential to trade sideways or to even move higher. It's all going to depend on this dollar here. So what is the dollar doing? We've pulled back. This is a monthly again. We've pulled back and we're well off the high. We're in an area that it's spent quite a bit of time since 2015. So rolling over to the daily, we did dip and bounced. I do see that it's possible for us to roll over and dip again and go test that low, as well as a possibility of testing this high. Usually this will respond to things of concern. So if the markets are bullish, sentiment is good, inflation is maybe mostly dealt with, we're over the hump, soft landing, then there's no reason for this thing to stay that elevated. It should be reflecting, maybe a bit of unwind of the carry trade could be a situation, right? Some selling of the dollar. So we'll have to keep that in mind for our trades in gold. The way this is going to play out is if we see signs of it rolling over on Sunday, possibly weaker pre-market on Monday, that would favor a long position in the basic materials. As long as it's not too much of a gap up, you don't want to pay huge premium for the opportunity. You want to still get in at a realistic price, maybe just to pay a little bit of premium, but not too much. Or you could just avoid it because it's already moving or something like that. So any thoughts, Dave, on that?
No, that's
okay. And then one more thing to check. How's our energy doing? This has been the big rally back up to $80 a barrel on West Texas crude, coming from around the 67, 66, 67 area. We've gone back up to 80. So we did have a high up here at the 83, 84 level. So we'll see if we can tag that again. If we can get through that, it should be able to go back to 90. So it's definitely a change we've had in July here. So definitely a change. Hope that helps, guys. Good trading next week. And we'll catch you on Monday with Josh with a review of the 5-day swing trades and anything else that we can put together. Okay?
good luck.
All right. Cheers.